The new home mortgage scam. Now, when I say new, I don't mean like this is a new scam thing going on. This is if you were to go out, buy a brand new house and get a mortgage on something that was land last year. Have you ever seen a new neighborhood built and exactly 1 year later, there is for sale signs everywhere? I don't want you falling into the same trap. I actually personally fell victim to this myself. Even though I'm a real estate investor and I own single family, multifamily, and commercial units now, I've only been doing this for about 2 years. So I bought my house about 2.5 years ago. I fell victim for it, and I don't want you to lose your house over it. Let's dive into it.
Welcome to the Smack Fest, the beat down. The SWAT team is here on another beautiful day of shutting the week down.
And if we're just meeting for the first time, my name is William Dauria. I am a professional real estate investor that lives on passive income, and I want to show you how to do the same. I talk about real estate investing for passive income and the personal finance and day-to-day financial decisions that help you live a better life. It all started with, you're approved for a new house. Come down and check us out. Went down there and the term looked good. It was a 3.5% APR. This was in 2018, 17, 18, and it was a good APR for the time. And then they presented the new monthly payment of $1,265 for your new house. And I said, wow, that's a lot lower than all the other lenders. That's fantastic. I think we should do it. What do you think? Oh yeah, I think it's a great deal too. So it looks fantastic on paper. And you know what they say when it's too good to be true? It usually is. When in any case has it actually been the truth at the end? It's very rare, and it never happens with loans. So what they don't tell you is your payment's $1,265 for your first year. Are they lying? Technically, no. It's $1,265. They just don't tell you what's going to happen in year number 2. And it all has to do with how they assess your property at loan time. So when your taxes and insurance, in my case, was $126.55 per month, that is not an accurate representation of what my property actually is, or what it costs for that matter. In year 2, when they find out, oh no, your escrow balance on your loan is way upside down, we have to make up for that. Now, before I tell you my new insane monthly payment on year 2, I want to show you why this is a scam and why it's also a loophole that is being taken advantage of by shady lenders. This is how they can get away with it. So you'll see here on the tax records that 2017-2018 is actually at $25,200. That is actually the land value alone, not including the house. Now, since we bought this house in 2018 and it wasn't reassessed yet, we got the 2017 assessment value. Now, this was not disclosed verbally, of course. Now, you got to remember, I'm showing you how not to get scammed like I did. Only because so many people are losing their house over this because they are not being 100% honest with their borrowers. So what ends up happening is on your second year, when they do the reassessment, your payment really should have been the entire time $1,796 in this case. However, since you were paying such low amount that you will never be paying again, by the way, now your new payment on your home went from $1,265 to $2,094, and it's going to stay there for a matter of years. I just got off the phone with them today. I've been paying it now for over a year, and I am going to be paying the same amount for an additional 12 months. Now, here is the escrow. Look at the before, look at the after. I was paying $126 per month. I should have been paying probably around $650. Oh no, but because they messed it up, now my taxes and insurance monthly is $955, bringing my monthly payment to a new $2,094. So the average American, 8 out of 10 of them statistically live paycheck to paycheck. So can you imagine buying a house, getting comfortable with your $1,200 a month payment for the first year, okay? You're very used to it. Most people don't have a whole lot left over every month like they should, but then going from a $1,200 a month to a $2,094, and the shock and awe that would hit you when you open that bill, knowing that that is not a one-time bill, that is your new payment for possibly the next several years. And that's why when you get a brand new house in a brand new neighborhood, this happens. For sale, for sale, for sale, just listed, for sale, for sale. So guys, I want to show you something. At $2,094 per month I'm paying right now, I can get a rate and term refi, which will actually bring it down to $1,589 per month. And that is dropping my interest by 1.5 points to the lowest that I was ever able to see on a loan, and it's still not what they started me on to begin with. So if you take away anything from this video, when you look at your taxes and your insurance on your loan application, make sure that it's not excessively low. Make sure it's an accurate representation of your property, and if it's not, to make a mental note that your payment's going to be going up considerably, possibly double, so you don't get in the same trap that causes so many of my neighbors to lose their home. And if you think anybody needs to hear this video as well before they pull the trigger on a new home, consider sharing this video, smashing that like button for the YouTube algorithm, and subscribe if you want to, comment if you want to, and I'll see you on the next one.
Cash money.